Joby Aviation loses their chief financial officer. But what does this mean for the stock? So guys, once again, my hustle brother army in Discord came up with the goods and dropped this breaking news as it happened. Joby's CFO is stepping away from the business due to personal reasons. So let's get into action like we do twice a day in this eVTOL space and get a video out on bull and bear case in this scenario, followed by the Hustle Brothers thoughts. But before we dive in, make sure to hit that subscribe button to make sure you have 2 eVTOL videos on your screens every day. In this ever-evolving world of eVTOL industry, Joby Aviation has emerged as a beacon of innovation promising to redefine urban and suburban travel. However, the recent departure of Chief Financial Officer Matthew Field has rippled through the industry, sparking a whirlpool of speculation, analysis, and investor scrutiny. This significant leadership change at a pivotal moment raises numerous questions. How will it affect Joby's ambitions to launch its air taxi service in 2025? Will this transition bolster or hinder their financial strategy, investor confidence, and technological advancements? Let's get into this comprehensive exploration as we dissect the multifaceted implications of the executive shift. We're going to present both optimistic and skeptical viewpoints, and we'll introduce the Hustle Brothers thoughts and whether we think it's a buy right now. So let's get first into this bull case. So looking at the bull case for Joby Aviation following the CFO's departure, Joby has confidence in its existing leadership's ability. Following the announcement, CEO Joe Ben will take temporarily over the financial responsibilities of the company. This move can reassure investors that the core vision and strategy will continue unabated. Joe Ben's involvement might signal a hands-on approach to steer the company through this transition. His history with the company since its inception could provide a unique blend of visionary leadership and operational insight. I am really impressed personally with the proactive succession planning from Joby. The fact that Joby Aviation already has a transition plan in place with the CEO stepping in and the company looking for a permanent CFO suggests a proactive management approach from the company. This can be seen as a sign of operational stability and preparedness, potentially attracting investors who value strategic foresight. The immediate response to such changes often showcases companies' resilience and adaptability. These are qualities highly valued in a volatile sector like the eVTOL industry. Looking at market positioning and growth perspectives, Joby Aviation remains at the forefront of the eVTOL market. Despite the CFO's departure, Joby's technological advancements, partnerships, and progress towards the FAA certification keep its market position strong. The departure might not significantly hamper these achievements unless related to a financial strategy. The company's roadmap, including significant contracts like those with the US Air Force, Delta Airlines, and investment from Toyota, underpins the narrative of growth and market penetration. Regarding financial health, Joby has shown a commitment to maintaining financial health with a cash reserve that supports ongoing development operations. The company's involvement in contracts like those with the US Air Force and plans for international expansion in places like Dubai further bolster its financial stability narrative. The financial cushion might mitigate risks associated with leadership changes, providing the room to maneuver through this transitional period. Now let's talk investor sentiment of Joby at the moment. There is a short-term volatility yet long-term confidence in Joby from investors. The stock's dip today following the CFO's announcement might present a buy-in opportunity for long-term investors. Bullish investors might perceive this as a chance to invest in a leading eVTOL company at a potentially lower price, betting on the company's long-term success despite short-term leadership changes. The market reaction, while initially negative, could be seen as a temporary blip in the broader context of Joby's trajectory. At the time of recording, we've gone from $7.50 all the way back over $8. Now for any of you shorters out there, I'll get into the bear case for Joby Aviation following the CFO's departure. In regards to leadership and confidence, there could be a lot of uncertainty. The departure of a key financial leader like Matthew Field, especially to be closer to his family, might raise questions about the stability and attractiveness of Joby's current leadership and corporate culture. This might lead investors to skepticism about the company's ability to navigate financial challenges or further secure funding. The narrative of personal reasons for departure might fuel speculation about underlying issues in the company's executive team. There are risks associated with this transition period. Even with Joe Ben stepping in, there's an inherent risk during any leadership transition. If the search for the new CFO takes longer than expected, or if the new appointee struggles to integrate quickly, that could disrupt the financial strategy and investor confidence. The company's ability to maintain its financial strategy amidst the transition will be closely watched, with any misstep potentially amplified in the public eye. Swapping over to financial management concerns, there's a loss of expertise here. Matthew Field brought significant experience from Ford, where he managed a $100 billion operation. His departure could mean a loss of crucial financial insight and expertise at a time when Joby is gearing up for commercialization. This will potentially affect the financial planning and investors' trust. His departure might leave a void in strategic financial planning, especially critical as Joby approaches significant milestones like FAA certification and market entry. Initially, there was quite a noticeable stock impact. The immediate reaction to the news, with a drop in stock price, suggests that some investors see negative signal. It might reflect concerns over future financial management, especially with the company not yet generating significant revenue and the pressure to commercialize by 2025. Continued volatility could deter new investors and shake the confidence of the existing investors. Let me know in the comments if it's shaken you at all, or are you still as bullish as ever? There is also market and operational risks we have to consider. Like, will there be regulatory and certification delays? With financial leadership in flux, there might be concerns about managing the complex process of the FAA certification and international regulatory landscapes, which are pivotal for Joby's operational timeline and market entry. Any delay or misstep here could be more pronounced without Field's experience, potentially pushing back Joby's timeline and giving competitors like Archer an advantage. Leading on to that, another big risk is competitive pressure. The eVTOL sector is competitive, and any sign of internal disruption could be leveraged by competitors. If Joby shows signs of financial or strategic missteps during the transition, it might lose ground to other firms like Archer Aviation, which are also pushing for the same market share. The narrative of leadership instability could become one of the marketing points for competitors. Talking about investor sentiment and market perception, looking at it from a bear's perspective, we can look at the perceived instability. The departure might lead to a re-evaluation of Joby's stock as a high risk, especially if it's paired with other negative news or if the transition appears rocky. Investors might look for more stable investments if the perception of instability persists. The narrative around Joby could shift from innovation leader to one facing internal challenges. There could also be funding challenges. Without a seasoned CFO, securing additional capital on favourable terms could become more challenging, particularly if investors start questioning the company's financial strategy post-departure. The need for further funding to scale operations and achieve commercialization might become more acute with less favourable terms or conditions. So guys, let's now get into what the Hustle Brothers are thinking about this situation and whether we're buying or not. I take the approach that the leadership changes, including CFO transitions, are common in all corporations. While they can introduce short-term volatility, they also present opportunities for renewal and fresh perspectives. Joby Aviation's approach to this transition, with Joe Ben temporarily at the helm of finance, could be seen as both a strategic move to maintain continuity and acknowledgement of the need of new financial leadership to tackle upcoming challenges. If you want to look more at the market dynamics, the eVTOL market is still in its infancy stage, with all players facing similar hurdles regarding regulation, technology adoption and market acceptance. Joby's position might not be significantly altered by a CFO transition when viewed against the backdrop of industry-wide challenges. The narrative here is one of collective progress or delay, where Joby's situation reflects broader industry dynamics rather than isolated company issues. So my thoughts about the financial strategy and continuity of the business. The financial strategies laid out by Field are likely to continue, guided by an existing team and informing CFO. Joby's financial health, bolstered by previous fundraising and partnerships, provide a buffer against immediate adverse effects. The real test will be in execution of these strategies under new leadership, where the focus should be on continuity rather than upheaval. Guys, the stock price took a drop, but in my view it's an overreaction in the context of long-term investment in eVTOL technology. Investors with a long-term view might see this as a moment to buy in a promising technology at a discount, betting on Joby's resilience and inevitability of eVTOL integration into the future transportation system. Conversely, short-term investors might remain wary, but the impact might be limited if Joby continues to meet its technological and regulatory milestones. Let's look at for potential growth. The scenario where Joby finds a CFO who not only matches but exceeds Field's capabilities could be a catalyst for growth, guys. This transition could lead to new financial strategies, perhaps more aligned with Joby's current stage of development, focusing on scaling, international expansion, or even new market opportunities. However, I want to stress the need for risk management. Joby's response to this transition, especially in terms of communication, transparency, and strategic planning will largely dictate the narrative. A well-managed transition could mitigate the bear case scenarios, turning potential negatives into positives by demonstrating adaptability, resilience and strategic foresight. While the bull case celebrates Joby's resilience and market position, and the bear case warns for potential pitfalls, I feel our case recognises the true impact of the CFO's transition will unfold over time. It's a narrative of balance, where success hinges on how Joby navigates this change, manages its financial health, and continues to innovate in the competitive landscape. The story of Joby Aviation is far from over. I think the chapter's only just beginning. For me, I'm starting to dollar cost average back into Joby, as I don't know where the bottom will be. However, if you want to see the trades as we make them in our $107 to 107k challenge, then join our Discord. It's in the link in the comments. And guys, do you want to see our live discussion with the community on everything Joby and Archer? Well, check out our eVTOL Weekly episode 1 and I'll meet you here next.